Hi there, welcome to another episode of Build Your Wealth. I'm your host Linda. Today we're going to look at the factors that we need to consider as we pick a stockbroker in Kenya. As we all know, when you're a beginner investor, you need to have a stockbroker who will help you to access the stocks or shares in the Nairobi Securities Exchange. You cannot buy or sell shares directly without a brokerage firm. There are so many firms in Kenya, big and small. So what factors do you consider before you settle for one of them? So this information aims to help you to make confident, goal-based decisions based on your risk appetite, your investment goals, and your experience level. So if this is what you are interested in, welcome. Number one is you must ensure that the company you go for is registered under the Capital Market Authority. This is a very important one because if the company is not registered, that means that it is not legit. You go to the CMA website and just search for companies that are licensed and regulated as stockbrokers. There you will find all of them. Number two, that will help us to narrow down is as a beginner investor or as an investor, you need to understand your investment profile. We need to know how much risk can you take. If your risk appetite is low, you might consider to go for companies that are large and stable already in the market. If your risk appetite is medium, you can consider going for a mixture of both. If your risk appetite is high, you might consider going for actively trading companies. So under your investment profile, you will also find that your experience level matters. If you are a beginner, you want a company that offers education and training because this is something new to you. You want some training on how to buy and sell shares. If you are an advanced trader, you may not really be keen on a company that provides training. So that's why I'm saying your investment profile matters when picking a company. Factor number 3 is compare the key company features. You can compare how they charge their commissions. Most companies charge between 2 to 5% of the cost as commission. So you might want to consider how their commissions are, the withdrawal and the withdrawal charges. How are they? If it's way too much, as an investor, you don't want also to be incurring too much fees in the event or in the process of investing your money. So check on the account maintenance fees. How much do they charge to maintain your account? And the tip we said here is that the lower the fee, the better, but too low fees may also guarantee poor services. The fourth factor is the trading platform quality. How is the quality of the platform? Is it easy to use or is it complicated? Nobody wants a complicated platform. It should just be straight. You can just even learn by your own, buy, sell, how you can hold your shares electronically. It should just be simple. You can also consider are there apps, mobile and also web, like you can access it on Google. Is it user friendly? Compare search with other companies to see which one suits your needs well or your experience level. Another thing you might want to consider is the customer support. How quick are they to respond to your emails and to help? This will reflect in future when you have a problem with your trading and you pin them a mail. How far are they to get back to you to solve the problem and all that? So that's why we are saying it's important to know how their customer support is. Another factor is you may want to just check on the ratings and even other clients' comments. You can go on their websites and check what are other clients who have used so and so broker saying about it. Is it effective? Is it working? Is it nice? Or is it, is it not? That is important also, to know about the feedback of other people or other clients that have used the companies before you make a decision on which one to go for. Another factor that you might want to consider is if the company offers other tradable assets. If you are an investor who wants to diversify your investments, you may want a company that has other range of assets, for example, ETFs, electronic transfer funds, that has bonds, that has things like unit trust, so that you have all your investments in one bucket, or in one company. Another point that we might want to consider is how easy is it to open an account? Is it straightforward or is it a bit complicated? Going back on the communication, do they have multiple communication channels? For example, do they have emails, phone calls, texts, many options, such that they don't rely on one option in order to get in contact? For example, as of now, most of my clients are abroad. I'm looking forward to working with clients in Kenya as well. So if you are abroad, you will want a platform where you can just pin them an email rather than having to phone call or to visit physically, you see. So all those factors are important before you settle for that stockbroker that will let you trade and hold your shares electronically in their platform. I hope this helps. The key points are: find a stockbroker who is licensed and regulated by the CMA. Make sure that they align with your investment goals, your risk appetite. They align with your experience level. Make sure that it is easy to contact them. They have multiple channels. Check the reviews of other clients, the complaints history. Check the reviews of existing clients. What are they saying? Check also if they have a range of tradable assets, if you want to diversify, that is. All these you can check in the company's websites or even in financial news website. You can get all this information and find out before you pick a company and invest with them. Other than that, I would just want to wish you happy investing, and please consider subscribing to my channel if this is the content that you would like. And I promise I'll try to bring more relatable content for upcoming and existing investors. Bye for now, and see you next time.